Hey, what's up guys, it's Jonathan here, back with another public stock portfolio update. So as usual, we'll do a quick recap of some of the moves that we made in the public portfolio. Then we'll do a recap of how the portfolio is doing overall. And I'll give you guys an update on the AMC challenge. I just recently looked at my analytics, and about 80% of you guys who are watching my videos are not subscribed. So if this video provides you any value, please consider hitting the like and subscribe button. They both greatly help out the channel, help push this video out to as many people as possible. So let's get right into it. Just a quick reminder about how the public portfolio works. Every week we deposit $10 into this portfolio. I invest it in the way that I invest in my private portfolios as well. And this week we made a couple of purchases to increase the position of certain stocks that I already have. And as always, if you guys want to see me make these transactions live, check me out on Public. I have a link in the description below where if you use that link to sign up for Public, you get a free stock up to $70. So if you're interested, check it out. So this week, all of our moves that we made were on Thursday. And the first one that we made is that we bought some more end phase. So we bought about $2 worth of end phase at $146.34 a share. Currently, end phase stock is not only dealing with just the massive growth stock sell-off that we've seen in the market, but they're also facing some headwinds with the supply chain issues that we have. A good majority of solar panels are made in China, and because China has a zero tolerance policy when it comes to COVID, these supply chains have been greatly disrupted, causing the price of solar panels to go up. And when the price of solar panels go up, it makes it harder for people to get ROI on their solar panel array. I personally believe that if we could get COVID under control soon, that most likely a lot of these supply chain issues will be solved somewhere between early and mid 2023. And below $150 a share, I think that's a really good price to buy into end phase. So we also bought some Etsy, and we bought about $3 of Etsy at $170.40 a share. And there has been some recent pain around growth stocks like Etsy. I also think some of the pain we're seeing in Etsy also has to do with the fact that the business model Etsy has is somewhat cyclical, and we are starting to move away from the busy retail season that we had in the holidays to a time now where people don't make a lot of those retail purchases that they did during the holidays. So I think that's some of the reason why we are getting this increased pain in Etsy. So I figured that this would be a good time to increase that position. So we also added to Cloudflare, and we added $2 to Cloudflare at $103.28 per share. This is a position I have been wanting to build out more, as we've seen a lot of valuations, especially in the software sector, start to compress significantly in the past month or so. There's a time during this week where the price actually fell under $100. So it was a pretty good time to buy into this company. Given that they are a software company and they're a money-losing software company, it becomes very difficult to try to value this company. So you always have to be careful with these kind of companies because there still is a lot of risk that their valuations may be still too lofty, especially that we're going into a season of rate hikes. So we also bought some Nvidia, and we bought about $3 in Nvidia at $268.25 a share. I prefer buying Nvidia at these prices, and during this week the price actually got into the 250s, which is kind of my buy target for this company. So if we get that again this week, I'll probably most likely be adding to this position again. So let's go into my iPad and take a look at the portfolio. So currently the portfolio sits at $158.71, and all time we're currently down almost 18%. And this is mostly due to the sell-off that we've seen in growth stocks, given that this portfolio is mostly growth stocks. So the first position we have here is Tesla, and our Tesla position is up almost 20%. Even though there has been a lot of pressure on growth stocks, Tesla has kind of avoided that. And I've noticed this, that a lot of the mega cap companies like the Apples, the Googles, the Teslas have not been effective as much as a lot of the mid and small cap companies. So this is something good to keep in mind. Next position we have here is Enphase. Our Enphase position is currently down 14%. And like I said, I think that this company could make a really big U-turn in 2023. So watch out for that. It currently makes up about 19% of the portfolio. The next position we have here is Robinhood. And our Robinhood position is down 50%. In my opinion, I think it's highly oversold. And for me, I'm not really adding to this position because I'm kind of waiting for it to finally U-turn. But I think now it's at like $15 a share or something like that. I don't know what the market wants to price it at. I don't know if the market wants to make it a penny stock. Like I'm really confused about this because Robinhood has so many bullish things ahead of it. Like they're still going to come out with crypto wallets. So I really don't know why this is happening with Robinhood. Next position we have here is Alphabet. Our Alphabet position is down 2.5%. Even though our position here is down, Google has fared pretty well in this whole growth stock sell-off. Currently makes up about 11.5% of the portfolio. The next position we have here is Etsy. Our Etsy position is down 21%. The pain has really ramped up this past week. And for me, I just see it as a really great opportunity to continue to add to this company. This is a position I did want to add more into, so I'm just going to take this opportunity to acquire as many shares of this as possible, and some of my other favorites as well. Currently, it makes up about 8.5% of the portfolio. Then next position we have here is Nvidia. Our Nvidia position is down 8%. Nvidia is in a really good position as well to continue to add to. I really like it in the 250, 260 range it's currently in. And this position currently makes up a little under 5% of the portfolio. Next position we have here is Amazon, and our Amazon position is currently down almost 6%. Amazon had a pretty flat year last year. It's not really on my priority list to add to because I see so many other discounts in the market. And it currently makes up about 4% of our portfolio. Next position we have here is Disney. Our Disney position is currently down almost 4%. I have started to see a little bit more downwards pressure on Disney this week. So I'm guessing the market is now seeing it more as a growth tech kind of company. In my opinion, I think that Disney does have a little bit of a lofty evaluation at these prices. So next position we have here is Cloudflare. And our Cloudflare position is currently down almost 20%. It just seems like this stock just continues to go down and down. But if you do believe in their business model, I think that this is a really good time to build out a position on this company. Next position we have here is Matterport. Our Matterport position is currently down, 40%. Again, as another software company, it is getting wrapped up into this software kind of sell-off that we've had. It currently makes up almost about 2.5% of the portfolio. And our next position here is Palantir. Again, another software company. It's down 30%. I haven't really been too excited to add to Palantir recently. It's kind of like, again, I only have so many dollars, and I have other companies that I have a little bit more higher conviction for than I do Palantir. So I may add to it eventually, but not right now. So next position we have here is Trade Desk. And our Trade Desk position is currently down 16%. I really like this as an advertising play for this year. I think the advertisers will do very well, especially as stimulus money starts to go away. And there's going to be companies that are going to want to have the same revenues that they've had over the past year. So I'm really looking out for the advertising space. Next position we have here is Bitcoin. Our Bitcoin position is currently down 11% and makes up about 1.5% of the portfolio. Currently, we have started to see cryptocurrencies move alongside with tech stocks, whereas in the past, it actually used to have a negative correlation to tech stocks. So that is a really interesting shift we're seeing. So next position we have here is Redfin. And our Redfin position is currently down 35%. As we start to see interest rates increase, I think that Redfin's going to have a really difficult time keeping up with that. I still like the company long term. Currently makes up a little over 1.5% of the portfolio. So next position we have here is Ethereum. Our Ethereum position is down 14%. Like I said with Bitcoin, we are starting to see a lot of cryptos start to move the same way tech stocks are moving. And currently our Ethereum position makes up 1.5% of the portfolio. So next position we have here is DocuSign. DocuSign is another software play. Currently we're down on it about 16%. It makes up a little over 0.5% of the portfolio. So to give you guys an update on the AMC challenge, we bought 4 shares of AMC at $37 a share. And like I said, I did promise to hold it until the end of the year. But just this week, I did sell all 4 shares of AMC at $20.19 per share. I sold it at a 45% loss and we're down about $68 on that position. So the reason why I sold it is because I wanted to pay down some margin in one of my other accounts. But then also, in my opinion, I think from a fundamental aspect, I think AMC at best is a $10 per share stock. And in a risk off market, you're gonna see speculative stocks like AMC start to move down as people start to become more tight with cash. So for me, I decided, this is the point where I'm going to call it a day. All the apes that are still holding strong out there, best of luck and I wish you guys the best. So that's basically all I have. Wait. There is something else I did want to mention. We do have 2 pretty significant lockups ending this coming week. So on January 18th, the lockup is going to expire for Matterport. Currently, the pre-SPAC investors of Matterport currently hold about 23% of the shares outstanding. I don't think this is going to have a huge impact on the stock, but I think this is why we have started to see the stock sell down even more over the past couple of days. So I would say keep your eyes open for that when the market opens on Tuesday. And then on the very next day, on Wednesday, Lucid has the same kind of lockup expiring for their pre-SPAC investors. And this one's a little bit more significant because about 74% of the shares outstanding are owned by the initial investors into Lucid. So these two lockup dates may prove to be really good times to buy the dip on these stocks if you guys are interested. But anyways, that's all I got for you guys this week. Thank you so much for watching. If you made it this far in the video, I'm pretty sure you'll like the other videos I make. I make videos talking about investing in stocks, real estate, and personal finance. So if you're interested, hit the subscribe button and notification bell so you get notified every time I post a new video. Also, it would really help me out if you guys hit the like button as well. It'll help push this video out to as many people as possible. Let me know in the comment section what you guys are looking at in the market this week. I'd love to hear from you guys. Also, check me out on all my social medias. I have been posting a lot of short videos on Instagram and TikTok, so check me out there. And thank you so much for watching. I'll see you in the next video.